Today, Governor Lowe and the Reserve Board met, and no surprises here, cash rate remains on hold at 1.5%. Now, we did see some interesting commentary come out of the RBA over the July period, and some of that commentary was around what they thought was an ideal cash rate at around sort of 3.25%. Now, the current cash rate sitting at 1.5%, the markets took that as an indication that maybe rates were going to increase. But in reality, once you sort of set the inflation target between 2 and 3% and the cash rate basically sitting at 1.5%, you've got that sort of 3.25% now. Now, in addition to that, obviously we've got the out-of-cycle rate rises that have been caused by the banks, and that's obviously doing some of the heavy lifting for the RBA in terms of trying to keep the economy moving without property prices causing an asset bubble. Now, what we also saw occur in regards to July was the exchange rate. So the Australian dollar pushed through 80 US cents. And on the trade-weighted index, it also moved as much as 5% across most currencies. Now, that's not obviously a good news story for our exporters who want to basically sell more products, and that ultimately flows into our GDP. So when we sort of see that type of movement, that's almost like getting a 25 basis points rise in the cash rate anyway. So the Reserve Board and the Governor don't really need to do anything on that front. But it is obviously a challenge for them in terms of trying to keep that exchange rate lower. We effectively want an exchange rate around 70 to 75 US cents because that obviously means that with those greater exports, our miners can do more investing in jobs, and basically our exporters, our agricultural and sort of farming exporters can also sell more of their produce overseas. So it's really important that we try and keep that dollar down lower so we can obviously do more in terms of driving the economy forward. Just on that point, let's have a look at the unemployment data that came out. So we did see unemployment maintain at 5.6%. So that's good. You know, obviously we want to keep pushing that down lower, but we're not seeing it drift out to that sort of 5.96% because that's obviously where we have some challenges, you know, in terms of obviously people aren't employed. We still have some capacity when it comes to, you know, people who want to work more hours, and we're working harder on that. And in terms of the ANZ job numbers, we are seeing some positive data come out there as well. So month on month, we saw some good increases. Over the year, we've actually seen increases of 4.9%. Now, if we also extrapolate that data out and have a look at some of the trend data, what we've basically seen is over the last 6 months, the trend data is up 0.9. Now, compared to, that's month on month, compared to the year before, we're only trending at around 0.3% growth in job advertisements. So that's basically telling us that there is still some, you know, some momentum. Very sluggish, but some momentum. Also, business confidence is showing some improved signs. So overall, we'd like to think that we're sort of getting some momentum, but the economy is still reasonably sluggish. When it comes to the property market is sitting, you know, it's still surprising, it's still quite resilient. It just won't sort of cool off like we thought. We did see some earlier data in sort of April, May, where we were starting to think, you know, this is starting to cool down a little bit. But the latest auction clearance rates out of Sydney and Melbourne are still saying that there has people who have appetite to basically buy property at the moment. So it still obviously comes down to the fundamentals. So here's a little tip for you. We've just recently launched Location Score, which is a measure of demand and supply by suburb in the marketplace, and that's going to help you buy the right asset. It's still going to come down to asset selection at the right time and not buying into a market that's overheated or oversupplied. So really important data. So check that out at locationscore.com.au. So that email address again, locationscore.com.au. Check it out. I think you'll be surprised because it's a great way to find the best locations in Australia.